Dear guests, esteemed participants, a very warm welcome on behalf of the Europa Forum Lucerne to today's event. What is it about? The Europa Forum Lucerne is committed to a strong Switzerland and a strong Europe. Every year, our community works on a topic and derives implication for companies, for Switzerland, and for Europe. This year's topic is the emergence of China. In this context, it is our intention not to treat sustainability as an isolated item, but to systematically integrate it into our activities all year long. It is therefore a great pleasure for us to progress with our joint event series, together with our partner EY and the Green Business Switzerland initiative under the title, Why Will Green Be the New Blueprint for Success? A special thanks goes to BlackRock as a partner and host of today's event. We all have joined forces to tackle some of the most pressing sustainability issues of our time, to be inspired, to learn, and to make a positive and lasting impact for us all. By investing in thought leadership and exchange now, we aim to shape a greener future for our customers, our community, and for our children. Today's event is entitled, How Can You Outperform Non-Sustainable Businesses? And then I'm pleased to now hand over to our moderator, Mr. Stefan Geiger. Stefan, the floor is yours.
Many thanks and a warm welcome from my side as well. My name is Stefan Geiger. I'm the ESG lead financial services at EY Switzerland. Our event today is part of a series where we focus on decarbonization and sustainability. We have already held a first event together with Tetra Pak, and today we will focus with our host BlackRock on the investor lens and on this point of view. But we'll also have real economy use cases with us, with BKW and Holcim, and they will tell us about the challenges of transforming and maybe also about the challenges of having discussions in investor relations. If you want to decarbonize successfully, you need to have a credible plan. And let me just show you one slide that includes the key elements on this journey. You can see a lot of acronyms referring to regulations, referring to pledges and initiatives. We will not talk about each of them, but we will talk about the elements and include it in our discussions to be successful. So basically, it starts with a commitment, with a discussion about purpose and performance, and about your specific ambition you have as a financial service provider, as well as within the real economy. Then you have to measure in order to know where you stand, and only what gets measured also gets managed. Here in the financial services world, we have now standards like PCAF that are evolving, and this is a method of carbon accounting, and especially the financed emission part becomes relevant, and this is where we have the interlinkage with the real economy, where we also have an interlinkage to clients of financial service providers when it comes to their investment portfolio, to the lending portfolio, or to the underwriting portfolio, depending on to whom we talk to. Then there's also a forward-looking part, the scenario analysis, especially when we talk about decarbonization and climate risk. Here we are talking about an involvement where we don't know where the journey goes. So you need to think in scenarios. You need to think about a forward-looking way of dealing with these topics. And this is also something we can talk about today. Setting targets, communicating them transparently, and in the end also disclosing what your plans are. This makes you a credible investor. This makes you also credible in the real economy. if you do this based on carbon accounting, if you do this based on your thoughts about the future. And here we have a lot of regulation kicking in. I think Europe is really in the lead for that. And in the end, maybe the most effective way of transitioning with clients is then the engagement part, where you actually enter into a dialogue. And this is what we want to also have today, a dialogue between investors and real economy undertakings. With that, I hand over to our host today, Mirjam Staub-Bisang, country head of BlackRock.
Thank you, Stefan, for this very nice introduction. I'm actually waiting for the slide. Here we are. Thank you, and thank you everybody for attending today's session. It's a great pleasure to be here. I'm super excited to have this exciting panel that we're going to have afterwards, but now you have to bear with me for a couple of minutes when I will tell you a little bit about BlackRock's road and to net zero. There is an Indian saying, we have not inherited the world from our parents, but borrowed it from our children. This saying has stayed with me for approximately the last 10 years since I embarked on a journey in sustainable investing and wrote this book on sustainable investing for institutional investors and had that prominently on the first slide. But today I find this saying even more striking when we speak, as we're going to speak today, about the involvement and the role of shareholders and stakeholders alike on our way to net zero. When I think about last year and this historic year of 2020, and I think about January, I think about the World Economic Forum, and I think about Greta. I think about Donald Trump. Do you still remember him? Donald Trump, with his commitment to plant 1 billion trees. And it just seems so long ago. Because then what happened afterwards? A couple of weeks later, COVID-19 hit us as a society and took a horrific human and economic toll. Many of us expected, actually, that the pandemic would slow down global action on climate change. But to many people's surprise, also mine, it didn't. The pandemic forced society, as well as the economy as a whole, to remind us of the fragility of our planet. With this, it has driven us to confront the global threat of climate change much more forcefully even. So more importantly, in 2020, we saw governments and companies align in their commitments to a net zero world. 127 governments responsible for over 60% of global emissions are considering or already implementing commitments to net zero, and over 1,100 companies globally, including BlackRock. In January 2021, we advanced on our sustainability journey and committed to net zero carbon emissions by 2050. And we also committed to supporting our clients on their journey to a net zero world. What do we actually mean when we're referring to a net zero economy? It doesn't mean zero emission. It actually means an economy that by mid-century, by 2050, it emits no more carbon dioxide than it removes from the atmosphere, the scientifically established threshold to keep global warming well below 2 degrees Celsius. This in turn means that human-produced emissions need to decline by approximately 8 to 10% annually between now and mid-century. So the problem we're facing, how do we shift from a high carbon-intensive economy as we have it today to a net zero economy? There is no company whose business model won't be profoundly affected by the transition to net zero. And as the transition accelerates, companies with a well-articulated long-term strategy and a clear plan to address net zero goals will distinguish themselves with their stakeholders, with consumers, customers, policymakers, employees, and shareholders, by persuading them that they can navigate this transition to a net zero world. But companies who stand behind and are not prepared for that transitions, they will see their valuations affected, and they will see that stakeholders lose confidence that they can adapt their business models and manage successfully on this road into a new world. But let's have a look at ways to actually reach the net zero economy. Different companies in different sectors will take different approaches. Key strategies are abatement, investment, and compensation. And in that context, we speak of so-called science-based targets, which basically set sector-specific goals and measures that companies need to develop to provide a clear route to reduce greenhouse gas emissions in alignment with the Paris Agreement. But I'm sure we'll be actually talking about that in our panel a little bit later on. Here we go. In a net zero economy, the interests and objectives of stakeholders and shareholders alike converge. A clear sign of this was what I would call the historic week of climate action just a few weeks ago, and you see that in the tiers of newspaper articles on screen. On Monday in that week, we read the headlines about Shell, where a Dutch court had actually ordered the company to reduce its carbon emissions by 45% by 2030, so significantly below of what the company had planned to do. And then later in the week, and I found this even more interesting, later in the week, we saw this proxy fight at the shareholder assembly of ExxonMobil, when many shareholders supported an activist hedge fund, a small activist hedge fund, and its proposal to elect board members with a sustainable profile and a sustainable agenda, and opposing the proposal of the board, who proposed much more conventional board members. And I think we're going to see much more action like that in the future, and it's going to be interesting to watch that space on what shareholders will do and what stakeholders will do and what they're doing together and how they're aligning their agenda. So in the net zero economy, we expect to see NGOs and shareholders alike to put pressure on companies to change their business models and contribute to a low-carbon world. And while the objective of the NGOs is actually to protect the environment, the objective of shareholders is always long-term value creation. And it's interesting that sustainability and meeting stakeholder demands are key to achieving that in this new low-carbon or net zero world. From an investor's perspective, we don't only see activists moving, but we also see the broad masses of investors into sustainability and sustainable investing. We see a significant global momentum, and you can see that very well on that slide. On that graph, you see the growth of sustainable investments outpacing the growth of the broad asset management industry. So if you look at the last 2 years, you see the broad asset management industry grew by 4.5%. Sustainable assets attracted 17.3% more, or 27.3% more in 2020. So you see this terrific momentum into sustainable investments, and that was 2020, 2019, 2020, 2021 has even outpaced that growth. Going forward, we see a continuation, or we expect to see a continuation of that tectonic shift of capital into sustainable assets and away from non-sustainable assets. This based on changing investor preferences, regulatory actions, and frameworks. At the beginning, I mentioned BlackRock's commitments to net zero in 2050 and to supporting our clients in achieving their goals in a net zero world. And so we agreed on several measures across 3 broad categories: measurement and transparency, investment management, and investment stewardship. And regarding measurement and transparency, we heard it at the beginning, what gets measured gets managed. We're looking to provide better data and better measurement tools to investors to take their investment decisions. And here we can highlight our work around finding scores to show the temperature alignment of portfolios with the Paris Agreement and moving those portfolios in alignment with the Paris goals and below 2 degrees Celsius. Today, we stand approximately around 3 degrees in a broad, diversified portfolio, and we have to get down significantly. When we look at the second category, investment management, here, obviously, we focus on providing our clients with investment opportunities that helps them to benefit from this transition to a net zero world. Let's just think about the electrification of transport and the growth of electric vehicles. That's a no-brainer, but there are many other aspects of this that are attractive for investors. And then lastly, there's the topic of investment stewardship, the way we engage with investors, we engage with companies boards and executive boards. We'll speak about that later on as well. But here, there's a continued focus on making sure that companies inform investors transparently about their climate risks and sustainability risks and show a clear plan on how they plan to address those risks and move to a net zero business model. And all of this, and I think that's important to understand, all of this we do because of our belief that climate risk and sustainability risks are investment risks. And we always act in our fiduciary duty to our clients. Now, to sum it up and to come back to the quote at the beginning, sustainability has become mainstream and it is further accelerated by the commitments to a net zero economy of many, many investors and companies and governments alike. 2050 seems a long way away, but just think of your children and the world they will be living in when they're 20, 30 or 40. My youngest will be 40 then, and I want her to live in a healthy world, and I want to contribute to that. So my question to you, and this is how I would like to end my keynote, is what are you going to do and what are you going to contribute? And with this, let me hand over to Stefan to now lead us through the panel. Thank you very much.
Dear audience, I'm now looking forward to the panel discussion. It's going to be 45 minutes of questions that we'll have in the round here, but we are also very much looking forward to any questions you have. The audience is really selected exclusively, and we have not only a high caliber panel, we also have a high caliber audience. So please, if you have a question, you can already put it in the mask and submit this question. We will then moderate it at the Q&A session in the end for the last 15 minutes. With that, I'm now introducing our panel, and I'm referring to Ms. Staub-Bisang, who is our host today from BlackRock. She was originally admitted to the bar and has a PhD from the University of Zurich and an MBA. Her stations include Merrill Lynch, Commerzbank, Swiss Life, and Quadrant, and she has been founder of an own company which was specialized in sustainable investments. I think this is what also brought her to BlackRock, and she became country head at BlackRock in 2018 and has also a global senior sustainability role within the group. With that, referring to Ms. Suzanne Thoma, she has studied at the ETH chemistry, has also a PhD and an economic add-on. Her stations include division lead automotive at BKW Group. She has been CEO at Rolik Technologies in the electronics sector. And she's now part of the BKW Group board since 2010, has been introduced as the CEO in 2013, so already quite a long time ago. Then we have Mr. Beat Hess. He's also a legal background, admitted to the bar, and a PhD. In the backstage area, we just found out that we were going to the same school in Obwalden. I have to mention that. And he has a long career at ABB, where he has started in the legal department and made it to the general counsel. From 2004 until the end of 2010, he was a legal director and ExCo member of Shell, also an interesting company, we heard it today. And he is or has been member of various boards like Nestle, Sonova, and today he is here in his role as a chairman of the board from Holcim. With that, I would like to pass the word to Ms. Thoma, and maybe you can elaborate a little bit on the suitability agenda that you have, and maybe also let us know about some success stories with regard to suitability that you could tell us about.
Well, if you look at BKW, we have two main areas where we are active. It's the energy business in all its value-added steps, and of course it's a services area which focuses on buildings and on infrastructure in general. If I look at success stories, of course we have built up over the years a strong and profitable portfolio of investment in the energy sector, particularly in the area of wind and somewhat of solar, and we have added technology to it in order to optimize the yield of the electricity production and also the financial yields in the sense of managing when electricity is being produced and when not. This has gone very well and is certainly adding a lot of value. In the building or infrastructure area, we are very active in so-called green buildings, which means adding technology in order to reduce emissions from buildings. About 1/3 of the emissions in the world come from buildings and infrastructure, so this is a key area. We are moving more and more in the direction of offering total solutions to our customers in the planning and in the execution area in order to meet the goals that we all share.
Thanks a lot. Maybe moving on to Mr. Hess. Can you talk a little bit about the sustainability agenda you have at Holcim, and maybe also about some outperformance examples that you already have or are looking forward to?
Well, look, Cement, of course, we are a cement producer, actually the biggest producer of cement in the world. Cement is the second largest used commodity after water worldwide. But also, we are aware that cement is, or the production of cement is connected to production of a lot of CO2. So for us, the reduction of CO2 in the production of cement is vital. It's a matter of survival, whether we like it or not. Actually, I do like it. We had to spend hundreds of millions of dollars in the research and in our efforts to reduce CO2 in the production of cement. How do we do that? We offer new forms of cement with different fuels where we have less CO2 emissions. We offer cement that is recycled from existing buildings that are taken down. We recycle the material and offer a big portion of the cement as recycled materials. And we are a lot engaged in waste management, where we can achieve, where we can have fuel that will produce less CO2 and, by the way, other gases that we want to reduce in the production of cement. I stop here.
Thanks a lot. A matter of survival, I noted. Maybe referring to Ms. Staub-Bisang, the Dear CEO letters from Larry Fink, they have been very influential, and also now at the AGM's discussions that you maybe also have outside of the AGMs, the engagement and the discussion on climate risk is investment risk. Can you maybe let us know and elaborate a little bit on what are the key elements you're looking forward, that you're looking at when you make an investment, how you try to engage, and is there a red line, or are there KPIs you're looking for? Are you looking for laggards or the ones that are moving faster? When you are entering into a discussion, what are the things you are looking for?
Yeah, thank you. I think that's a very interesting question, because I think the way we engage with companies has evolved over time. I mean, we've always had a very large stewardship and engagement team and have been engaging with companies globally for many, many years. And while in the past the focus was very much on the governance issues, that can be, incentives, but also diversity, always geared to adding value and looking at the long-term investment performance of a company. The climate dialogue has entered our discussions with companies over the last couple of years, and then very pronouncedly over the last 2 years, from the moment we came out and have clearly stated that it is our belief that climate risk is investment risk, and we want to address that with companies for the benefit of our clients. Because I think this is always an important point to state. We act as a fiduciary to our client, and it is our goal to maximize long-term investment performance for our clients. And especially since we are the world's largest index investors, we don't have, for most of our investments in listed companies, we don't have the option to exit an investment and to sell a share, but we are in these certain securities that are represented in an index. So our way of adding value as a shareholder is exactly with that dialogue with the company's board, executive board, and advisory board, and to understand whether or to what extent they share our view on climate risk, and they see that as a risk to the company's long-term performance, and what the measures are that, or what the plan is to address this climate risk, to mitigate the climate risk, to find alternative ways of investing, taking a strategic route, and what the measures are. Also what the costs are, of course. So more pronouncedly now over the last 18, 24 months, we have engaged with companies on that. And you asked me about the red line. You know, as a shareholder, I would say there is the continued dialogue, and then there is the voting action in the General Assembly. And so, for example, last year, we asked companies to inform transparently about their climate risk, be that based on TCFD or other reporting frameworks. And for companies who felt either not comfortable with informing transparently or didn't want to or couldn't, we gave them time and said, look, take your time, take a year, but by next year, we expect that you understand your climate risk and can inform your investors on that. If not, we would consider taking so-called voting action. Voting action can be that we would vote against the re-election of board members. Or now, the example I gave in my little keynote before, that we would support a shareholder proposal, such as the one of this activist hedge fund, which proposed the election of board members who would have a good understanding of climate risk and help the board to define its strategic course in line with climate objectives.
Thank you. That's very interesting. I think a note on my side, Europe is moving ahead with regulation. Maybe the proxy fights are fought in the US a bit more with force than in our Swiss AGMs, but this may be a future that is coming up. Mr. Hess, I was listening to your Chief Sustainability Officer at the Swiss Sustainable Finance Forum, and she was referring to best practices of Holcim. One was that Holcim tries to beat the market when it comes to CO2 emissions by 30%. An interesting note I had here was that this also depends on the region. So I think your ability to beat the market will adapt to certain regions. If Europe is running ahead, you will move faster. If a certain region is not best practice, you have less room, economical room, to maneuver. A second best practice I've noted was also you implementing net zero targets based on a science-based initiative. And here my question is, you know, what is actually your core thought behind having a leading ambition? Is it also to move the market because you are moving ahead? Are you trying to outperform by being the first mover?
Yes, definitely so. But I will add here that you know, we can produce cement that is where we have much less, significantly less CO2 emissions. We can use fuel, as I already mentioned, waste management, and so forth. We do a lot of research. But my point here is, in response to your question, that we also need the customers. We need to prepare the customers to be receptive for new forms of products, new forms of building. If we look at the move worldwide towards large city agglomerations, if we look forward to 2050, where we will have probably close to 10 billion people on the planet, and then we come, this is our conclusion, we come to the conclusion that probably 60% of the larger cities today are not yet built. And we need to, we can be a leader, no question about that, but we need to prepare, as I mentioned, our customers, governments, private customers, architects, building institutions, and so forth, to accept these new forms of buildings, new forms of cement. Take recycled cement, which I already mentioned, where there is still a reluctance, especially by government purchasers, a certain reluctance to accept cement that is, let's say, 20–30% made of recycled materials. And there, I must say that investors like BlackRock, they are of a big help, because they push us, they push the companies, they push our customers indirectly to accept these new forms of buildings. And if we get there, no question that we can be a leader, we can meet the targets that we set to ourselves. Lots of discussions in our board about these issues, but unanimity when it comes to reaching these the need to reach these targets.
Thank you. Ms. Thoma, maybe you can talk a little, and I will ask this question to every panelist. Is there a greenium already today, short term? Do you have innovative products? And can you sell them with a better margin?
Of course, there are innovative products all over the value chain already, particularly in the area of green buildings, as Mr. Hess also just mentioned. The drive that we see, particularly in Europe, comes from regulation, that customers ask for this because they have to, and I would like to say something there in addition, and also because buildings who have been constructed according to ecological standards have a higher valuation, and the banks are maybe more likely to finance them attractively. So we see a certain push also from the finance side towards investing into buildings which may be a little bit more expensive, but are more sustainable. What I would like to add in this discussion, however, is also the perspective of the consumer that has a limited disposable income. And maybe you remember 2 or 3 years ago, we had the Gilets jaunes in France, the yellow vests of middle and lower middle class people who protested against climate action leading to higher costs in their government, and it went to the extent that the government was threatened. So I think in all the discussions that we are having, and in our policy in our company, we are fully moving towards a CO2 zero economy because it makes business sense for my company. We have to look at the big society as well, and not only from the business perspective and the finance perspective, to what it does to our society and the disposable income of the lower middle class population, be it in Europe and even more so in the poorer countries.
You are referring to a just transition in order not to have people with yellow vests on the street. I think this is a very important point to make. We're focusing on outperformance, but definitely we all believe in sustainability, the ones that are sitting at this panel. Maybe referring to BlackRock and greenium, or some specific innovative products that you have introduced. I'm thinking of Paris-aligned benchmarks. Can you maybe elaborate on that a little?
Yeah, thank you. And I think that question on premium is an important and interesting one when we think about the investment management industry. When I think of the state of the industry, say 10 years ago, you would have a clear premium, a price premium on sustainable investment products. This has gone. Because as I said in my keynote, we're really at the point where sustainable investing strategies have moved mainstream, and investors are not necessarily willing to pay a premium for a sustainable investing approach. So in all our sustainable investment products, and we're in the process of shifting virtually our entire product range to sustainable, there is no price premium at all. And because I think that just wouldn't be accepted by the market anymore, and I think rightly so. When we think about new products, innovative products, yes, temperature-aligned index products, that's a new product we have developed, and it tries to capture the idea that investors would like to have their investment portfolio Paris-aligned. So an investor, be that a private investor or an institutional investor like a pension fund, would hold an investment portfolio which is in line with the Paris goals of net zero carbon emissions by 2050, and actually hold companies that are aligned with this net zero pathway in aggregate, of course. And this leads to a lower exposure of companies from high carbon sectors or high carbon, say, lower, higher carbon emitters in certain sectors versus an overweight of companies with low carbon emissions. So, but the goal is not to exclude companies from the index universe. The goal is to make sure that the portfolio as a whole is on a net zero compliant pathway. And I think that's going to be the future. I just read an article actually yesterday in the Financial Times, and I was so surprised to see that now almost half of all the professionally managed assets in the world, and here we speak of approximately 40 billion, investors have committed to net zero goals as well. So that number has skyrocketed in the last 6 months. I don't know the exact number, but it could be like fourfold over the last 6 months. So while the investment world is committing to net zero, there is no way out for companies to follow.
Thanks a lot. I'm taking that if we're talking about mainstreaming sustainability, risk integration, there's not really a premium. That is something that is expected from the asset managers today, and it is part of the fiduciary duty to include this type of data when you include them in the investment decision processes. This is also in line with what the regulator in Europe foresees and what you have to provide transparency on. Mr. Hess, can you maybe, again, shifting to the real economy, refer to the willingness of clients to pay an extra price?
Well, I think I mentioned that that's one of the challenges we are definitely, and I repeat myself, committed to our targets, but we need the customers, governments and construction companies and so forth to go along with us. And yes, there will, cement is cheap worldwide, if you look at it worldwide. And cement will probably be a bit more expensive if we include all the money that we spend, all the efforts that we make to reach our targets. So there will be, or we would expect, the preparedness in the markets to pay a price for products that are produced with less CO2 and other emissions. Take, for example, the carbon capture and usage, or carbon capture and storage. When I was working at Shell, we had huge pilot projects for carbon capture and storage. These are extremely, extremely difficult, complex, and above all, very, very costly undertakings. So if you take all the efforts together to produce our product with less CO2 emissions, then yes, we will expect, and we are certain, that there will be a preparedness in future to pay a bit more for products that are produced in view of a greener world.
Thank you. We heard already that the financial industry is lining up, also given the fact that COP26 is coming up. So it is really high time for commitment for asset owners and asset managers. Mirjam Staub-Bisang, can you maybe tell us a little bit about the momentum you see and why this is really an explosion?
Yeah, this has, to me, this has come as a surprise. But when I think about the momentum that has been building up over the last few years, 2, maybe 3 years, and literally over the last 12 months, I would say exponentially. And as I mentioned, there wasn't even a slowdown due to the COVID crisis, which would have been expected. No, I mean, just this race to net zero, the commitments, they just continued. Think of the Green Deal of the EU, think of the Green Deal of now the Biden administration. I think it's become clear to stakeholders, actors globally, that only a concerted effort will help to keep global warming in rein. And this is more my personal opinion, and perhaps actually fueled by the COVID crisis. We see this concerted action because we saw how, as a society, we are stronger in working together and fighting a global health crisis. And perhaps this can be seen as a blueprint of collaboration also to fight the climate crisis. I think COVID took us by surprise. None of the governments were really prepared, not even the Swiss government, one wouldn't believe it. But the climate crisis, we've known about the climate crisis, I would say, for a while. There are only a few critics left, but and somehow there was no sense of urgency. I think what we see now, there is a sense of urgency, and stakeholders globally, policymakers, governments, investors, but also consumers, clients, they're all willing now to contribute to finding solutions. And I think it's only that concerted effort which will help us achieve that goal.
Ms. Thoma, you are facing sometimes this investor pressure. Can you maybe also let us know when the stakeholder ambitions, that when they are very high, when they are getting unrealistic? Can you maybe tell us some examples about that, or where it goes too far, the expectations? One might say it is easier for the financial industry to shift the portfolio than for a real economy undertaking to actually transform their business.
Well, that's an excellent point. We are speaking about the fundamental redesign of many important aspects of our society, one of which is energy supply or changes in the building area, others, and that takes time. It takes decades. And it is indeed for a company like mine also a responsibility to do this transition in a way that is sustainable, in the sense that the company continues to exist and that we can continue to supply our customers. We believe that what we heard, what gets measured gets managed, yes, and one has to be very careful that what is managed or what is measured is also helpful in this transition, which goes long time, and is not only just a short time idea that will be more of a window dressing. So that is very important. I can give you an example to be a little bit more concrete. If you want to have an energy transition to renewable energy, then we will still need to assure the security of supply. In order to combine security of supply with renewable energy, one may have to invest in gas supply, so electricity production from gas. If this is accounted as only negative by the financial industry for a company, then that may be a reason not to invest into these gas turbines. But then what is the price? It's maybe the government who has to do it, or we are risking the security of supply. So it is very important that these metrics that are being used do also make sense in the long run. So I like much more the idea of having a dialogue with the investor, how one moves towards these long-term goals, than just to have individual key performance indicators who may be helpful or maybe even be detrimental if you look at it in a holistic way.
Looking at the refinancing side, Holcim has issued a sustainability-linked bond that is linked to ESG performance. Is that something you can recommend? Is it a success story, Mr. Hess?
Well, it's definitely a success story. I think in our business, we are the first company that went out with this sort of financing. I believe that they will see much more in the future. But one thing I want to mention as well. I mean, cement has been around for hundreds, if not thousands of years. The Romans used cement and concrete, and it will be around for probably hundreds of years because there's no substitute. So I think what Ms. Thoma said is very important. We have to engage in a dialogue like we are engaging with the BlackRocks of this world. I do myself roundtables at least twice per year. I'm always surprised, by the way, how well these investors, like a BlackRock, how well these people are prepared in these discussions. And they challenge us. And that's right, that's fine. It's a fact that we need to reach these targets. So certain shareholders can lamentate about that and say, well, our main purpose is to produce money, dividends for the shareholders, fine. But it's a fact that we need, it's a matter of survival, as I said at the beginning, that we need to reduce our CO2 emissions. But I repeat myself again, there is no substitute for cement. You cannot build a wall for a hydropower plant with wood. It's just simply not going to happen. And you know, it's a good example to repeat what Ms. Thoma said. We need also recognition of the effects of building, say, a building or a hydropower plant with cement. That permits us to produce or contribute to the production of green energy for 200 years. And that's an important point to make. And we expect, of course, in all these discussions, that there is an understanding of, well, first of our efforts, an understanding for our products that we can offer, and an understanding of also the difficulties, the financial challenges that are connected with the production of cement with less CO2 emissions.
Maybe to stay with you, we hear about Biden's plan, infrastructure plan. Not only Biden, the Biden administration, but also other administrations, they build back better. Do you think you have a competitive edge with the products that you're offering? Is that something you really bet on, that the governments will actually put that in their due diligence catalog?
Yeah, I think so. Well, first of all, we are a leader in our field. That gives us certainly certain advantages in the markets. The infrastructure goals that have been set by President Biden and are also now in place in many other countries give us certainly an opportunity to move forward successfully. Our order books, I can proudly say, are full. In many countries, we had a very good year 20. I'm, of course, looking forward, hopefully, to a good year 2021. And that is not the least because of all the efforts in the infrastructure world that we now see. If you look at the United States, if you look at roads, bridges, buildings to a certain degree, then you understand that they're probably the 1 billion, it was 2.2 billion, now it's closer to 1 billion, that President Biden wants to invest. If you look at all of that, then we should be a very important contributor to these developing to these markets.
Thanks. I can already see that questions are popping up for the Q&A afterwards. They are referring to competitive edge. I also have one of these questions on my list. Question to BKW, your investments abroad in renewables. Can you let us know whether this has been a success story or what to look out for if you do those investments, maybe some lessons learned also?
Our investment abroad, particularly in wind generation, has indeed been very successful. One has to realize that it was mostly under regulation terms, so it was also more fixed income type business, added with technology in order to optimize the production where this is possible. Today, the situation is so that one has to look out at the price of the individual projects in the area of wind. We have something like going towards a bubble in the prices of the projects or even final installations that can be acquired. And that can also be seen, by the way, in the valuation of some companies who are fully and only specialized in producing renewable energy. So you have to look out that you really still get a good value for the investment that you are doing.
Thanks a lot. Maybe a final question to each of you to close the panel here before we have the Q&A. So what are your key arguments from a business perspective to put climate in forefront? Maybe BlackRock first.
Yeah, for us, climate risk, sustainability risks are investment risks. Sorry for repeating myself on that one. But with that belief, we put sustainability at the center of all our investment activities, investment in companies, but also engagement, because we feel this is the best way we can address our fiduciary responsibility versus our clients and ensure that we help them create value over time.
Thanks a lot. Maybe Mr. Hess, how do you convince critical voices? I mean, there's not always all investors asking for the same. How do you convince critical voices that are more looking for the performance?
Well, first of all, if I look at our board, each board member in our company is personally committed and convinced that we need to make a lot of efforts, and they are the ambassadors to our investors to convince reluctant shareholders, if you will, that this is a necessity. And then, of course, the outside world is committed today very much to reduction of carbon emissions. So that's a reality. And as the saying goes, perception is reality. And it is just a need, as I already mentioned, a need. It's a matter of survival for us to meet our own targets and to meet the expectations of our main investors. That's, I think, the main point I would like to make in response to your question.
And moving over to Ms. Thoma, the key arguments from your side?
We like to think of sustainability very strongly from a customer perspective, and we see a growing and increasing need from customer side to have sustainable solutions, mostly in the building and in the infrastructure area, and that is of course also influenced strongly by the regulation, by CO2 pricing, by regulation supporting sustainability as a whole. So for us, if I have to convince people who are skeptical, then I argue from the market and from the customer point of view, where clearly for us we see much more opportunities than challenges in this global movement.
Thanks a lot. Now starting to read out the questions that we receive from the audience. I think this one refers to topics we already touched upon, and maybe you can move on exactly. So Holcim and BKW, have your decarbonization or sustainability efforts resulted in better financing conditions, either through bonds or loans?
Well, not significantly in our case. We expect, of course, that will be the case in the future. But as of now, as far as I'm informed, our conditions, well, it depends what the question means by conditions, but in general, as far as I know, conditions have not or not significantly improved.
Maybe I can add.
Yeah, maybe also BKW.
Yeah. Okay, we have launched about 1.5 years ago a green bond, which was oversubscribed, and with that led to slightly lower interest rates for us, and we accompanied also KWO, Kraftwerke Oberhalsli, who did the same, by the way, for large hydro plants. Not that easy to have large hydro plants seen as fully sustainable. Another interesting topic, but there as well we have had very slightly better financing conditions, but it doesn't make a big difference indeed.
Stefan, may I say something related to that? I know the question is not directed at BlackRock, but on those considerations on climate change and climate risk and the effects on financing conditions, it's perhaps worth thinking about what's the kind of alternative option and what would happen what happens to company with a poor sustainability profile and how it affects their financing conditions. Because when I look at investors today, and here I don't speak only about equity investors, it's really also the bond investors and investors in loans, they look at sustainability profiles of the companies they issue these bonds, whether those bonds are labeled as green bonds or transition bonds. And the market uptake of bonds with a good sustainability profile is clearly much better than those with a poor sustainability profile. And when you think of companies, and here we don't have representatives of such companies, but like companies that are shunned by investors, sectors that are avoided by investors, be that the coal producers or be that tobacco producers, you don't find them in portfolios of sustainable investors anymore. They're taken out by a baseline screening of, in the case of BlackRock, of all our active investment strategies. So we will not be, with our active funds, we will not buy such bonds. And so you can only imagine what the effect on the cost of capital of companies is with poor sustainability profiles.
Good point.
Thanks a lot. Important point to make. Does anyone want to add to this? Thanks a lot. I just wanted to add specifically that it is definitely part of implementing the climate strategy and also from your target setting, what we were referring to. So it's a way to demonstrate, now leaving aside of whether you have a better financial performance, but that's definitely also part of an overall climate strategy to issue such sustainability-linked bonds or green bonds as you did. Next question goes to BlackRock. What challenges do you face in assessing which investments are ESG or not? Are they gray areas here? There are definitely.
Sustainability is not about shades of gray. It's about shades of green. And I think the key issue for investors today is the quality of data. We know that, and it's probably the biggest challenge that investors face today when they think about adopting a sustainable investment strategies. Is the data they rely their investment decisions on, is that robust? Is it reliable or not? And as we said several times now in the course of this discussion, what gets measured gets managed. It's important that the data provided by companies is as good as it can be. It's important that apples are compared to apples and not oranges, so that companies actually adhere to certain reporting frameworks to which I feel the industry is now converging to. When we look back a couple of years ago, 5, 6 years ago, 10 years ago, obviously there were different reporting frameworks which emerged. Now we see a convergence, we see an alignment. We also see an alignment of ESG ratings. So I think that's a matter of a couple of years until the data situation will have much improved. But of course, I think there's no black and white in sustainability. It's always complex, it's always systemic rather than idiosyncratic. So yes, data.
Yeah, I think that the shades of green discussion, I can maybe also make a few comments from a regulatory point of view here, the de-alienation between mainstreaming sustainability risks and then really having an impact. I think this is the de-alienation that the European Commission now tries to make more clear. And even though we're not directly hit by it, unless you're an asset manager introducing funds here in Switzerland, this is something that people will get used to. They are better educated on it, and I think it is then the term greenwashing that comes into play when you do less than a client expects when you talk about ESG. And I think that's definitely the case. If you just do the pure sustainability risk integration, as we heard, this becomes mainstream. With that, we refer to the next question to Holcim. If a carbon tax were to be introduced, what would be the expected consequences for Holcim? What part could be passed on to customers? How would it influence processes and products? And yeah.
Well, I mean, we support, generally speaking, we support the introduction of a carbon tax. Now, as I said at the beginning of this panel, cement is still cheap, and we would like, to a certain extent, also prepare our customers and the public to a world where building materials and particularly cement and concrete would be more expensive. So how much could be passed on to our customers? That's a question of judgment of how much the market can accept. Definitely we would need to pass on as much as we can. And it would certainly also influence processes in our production. Competitiveness is an issue, of course, against other building materials. Wood has been mentioned as an alternative to concrete, cement. I'm a bit skeptical, as I said before. Wood is not really a substitute for our products. And by the way, wood is not just, that you take the trees and you build a building. Wood needs to be prepared, and there's a long process of preparation. Wood doesn't last as long as cement. The recycling of wood is also connected to difficult, complex issues. But coming back to the question, yes, we would of course like to pass on a carbon tax to our customers. But at the end of the day, the purpose, I dare to say the main purpose of our company is to pay a decent dividend to our shareholders. And as long as we can do that, we will be happy to swallow, of course, part of more expensive or carbon taxed products becoming more expensive. But at the end of the day, we also need to look at our shareholders.
Well, if you manage to be better than the market by 30%, you probably will also be less hit by the carbon tax in the end. So I think that's a preparation measure.
Yes.
The next question is for everyone. So if you want to outperform non-sustainable businesses, which sustainability activities should you prioritize? Maybe Ms. Thoma first.
Well, that's a rather general question, which I would like to answer in a general way. At the end of the day, you will prioritize those activities that create the biggest added value. And how is added value created? It's created by the customer needs and what the customer is willing to pay or what he has to pay depending on regulation. And we are now in a business where all the vectors are going in the direction of more sustainabilities in the area of construction mainly, but partly at least also in the energy business. But as Mr. Hess just said, at the end of the day, of course, it is also driven by the value creation that a company can offer to its shareholders.
And it also refers to the fact that you need to measure and identify where your exposure is the largest. Definitely something I think we have also touched upon. May I have the next question then? This one goes to BlackRock again. Why is BlackRock pushing companies to report in line with SASB sustainability reporting standards? There are, even though some of the companies have GRI already, maybe as an explanation, GRIs and SASB are, I would say, the global standards, whereas SASB is not that well known in Switzerland. So far, it is more known in the US, and SASB has kind of a materiality, financial materiality point of view, whereas the GRI reporting standard has this double materiality concept behind for the ones that don't know these standards by heart. Coming back to the question, why is BlackRock emphasizing on SASB?
I think that's a very good question, especially here at such a panel in Switzerland. It's a question which I was personally asked a number of times ahead of the reporting season this year. And we feel as a company that SASB is a great reporting framework which produces the information necessary or which is very valuable to investors. So as investors, we like to rely on SASB, but we appreciate and acknowledge that actually GRI has been around as a reporting framework, I would say at least 15, 20 years. SASB is only about 10 years old, and that many companies rely on reporting according to the GRI standards. And so what we proposed to companies that we engaged with, we proposed them to kind of bridge the reporting, the GRI reporting to SASB in critical KPIs. And actually many companies took advantage of that approach rather than changing their reporting standards completely. But we observe a convergence of reporting standards, GRI working together, collaborating with SASB to make it easier on companies. Because as investors also, we acknowledge there are, the reporting, the sustainability reporting is a huge burden on companies, and we would rather have companies focus on their business than on managing reporting KPIs and ESG KPIs of different ESG rating agencies. But so we welcome this convergence of standards across the board.
Yeah, there's also official guidance out of how the two organizations try to link up and map the standards. The next question goes to Holcim. How is the commitment to Science-Based Targets initiative communicated and leveraged towards customers? and within your company, so the SBTi initiative, how is it communicated?
Well, that's a good question. We have in the past, if I look at 2 years ago or until 2 years ago, we had certainly big lacks in effective communication. We did important changes in our communications department, in our investor relations department, and we have realized and pushed in the board for more effective communication towards our customers and the outside world. So the need to communicate is recognized. By the way, tomorrow we will launch our new Holcim, or again Holcim trademarks, brands, and so forth. And I hope it will be an effective communication. And along with that, we certainly communicate our efforts on science with regard to the Science-Based Target Initiative. Communication, for me, for our board, is an important part of letting people know what we are doing in what are our efforts, both research, products, finance, or in with regard to less CO2 production in our processes.
I think it's difficult to communicate if you are a high emitter, but you are actually best practice moving forward. And I think here it needs a lot of active communication. So that question was definitely very valid. The next one goes out to all, and please pick it if you like to provide an answer. Comparing the drive for sustainability in Europe versus other parts of the world, who is currently leading and who will be leading in 10 years? What effects will that have? So maybe referring to regions like China, the US, and other parts of the world.
Maybe I.
Yeah.
So of course, very difficult to say who will lead in 10 years. Maybe also a question whether that is so relevant. What is relevant is that it is becoming increasingly a global effort, and that is very important in the competitive balance between the different regions, that all important regions or countries are now embarking or have been embarking for quite some time into a more sustainable economy. And that is maybe one of the most positive developments that we can see, that sustainability is not only a rich world's issue, but that is becoming a global issue. And with that, it has a much better foundation and base also in the competition between international companies or also local economies.
Thanks a lot. With that, given the time, I would like to take a last question. And this one goes to BlackRock. Which of your planned sustainable measures will most likely have the largest impact onto your own carbon footprint? I think the question refers to.
Yeah, I think that's an interesting question. It's one I actually thought about a lot myself. I mean, our own carbon footprint of our operations is actually fairly low and currently fully compensated already to the extent we can with carbon credits. So let's leave that apart. Obviously, our commitment to be net zero carbon emissions by 2050, I think that will have the biggest effect. So by the end of this year, we will come out with a baseline figure on where we stand in terms of the carbon emissions of our investments. So we take all the investment mandates, every security we hold in our 9+ trillion, I always get confused with the billions and trillions in English and German, 9+ billion investments into account, and we will set ourselves a target where we want to be in 2030. We can only reach that goal if we work together with the companies that we hold as a fiduciary to our clients, and make sure that they embark on a net zero pathway, and that's already in full force. So I think it's these commitments that are out there that will push the whole investment industry to embark on that journey, and again to support companies to get there as well. And perhaps on that note, and I'm not sure if that came out as good as it should, the Science-Based Targets Initiative. I think that's a great framework to actually show what a company can do and where it stands, and it really takes into account the different sectors and the different measures different companies in different sectors can take. And it's obvious that a company with large capital investments, with a large capital stock, cannot change around in 2-3 years, whereas a company perhaps in a service sector can turn around much faster. So for us as an investor, it's important that companies in different sectors adhere to these science-based targets that are set for each sector, and do whatever they can, whatever is possible. But it's obvious cement cannot be produced without carbon emissions. I mean, that's just the way it is.
Thanks a lot. The science-based targets, we can also say that from the advisory side, is really picking up a lot, and that is true for the real economy and for the financial industry, which just has received a guidance paper also on how to do that. Definitely here, when we talk about the financial institutes, we're talking about scope 3, as you rightly referred to, and specifically the financed emissions. That leaves me to say a big thank you to the great panel. Thanks a lot. Thanks a lot also to the audience. We are referring to the Europa Forum that is taking place in November in Lucerne. And I think as a closing note, it is very important to get the dialogue going between the financial industry and the real economy, and this is why we have set up this panel today. Thanks a lot.